Okay, just going to do a quick video today talking about head and shoulders pattern and the volume interpretation of what's going on in head and shoulders pattern. This video is being recorded on after the close of trade Wednesday 31st of March 2010, and here's the highest time frame tip bar chart that I look at in my E-mini day trading, the 4500 tip bar chart, continuous contract of the E-mini at ES here on TradeStation, and this is where we got the high of the day at 1170 being made with a head and shoulders pattern. You could also call this maybe a triple top type pattern, but you can see first of all the market kind of comes up, breaches the previous high for the day, makes a shoulder pattern, comes down, retests that high, makes a head pattern, comes down again, kind of retests the low, final third push into another shoulder. The market kind of breaks this type of neckline here, and then we go into a downtrend move. And from a volume perspective, I just want to show you what my indicators are showing. First of all, you can see coming into the first shoulder we've got a stopping volume pattern and a profit taking pattern, and these are showing me that although we're making new highs, this is being made on kind of higher volume but lower range, and so there's some selling going on coming into this first peak. The head here, again we've got another profit taking pattern going on here. We reach a cyclical turning point using the Hilbert sine wave here on the 4500 tip bar chart, and then the market drops away. You can see a couple of other things going on. First of all, this second push up into the head here, we've got a professional up bar into new highs, and that's showing the professionals are selling at that point and reversing going short. And then this final push with the second shoulder here, again another professional up bar testing those new highs, and again that's showing me the professionals are going to be selling at that point. Remember, the professionals are the smartest guys in the market. They're going to be selling at tops and buying at bottoms, so you know there's no confusion as to what's going on there. And then from a volume momentum perspective, this is the better momentum indicator, and this is showing me amount of buying and selling volume that's taking place. We have an exhaustion signal here coming into this first shoulder at this point here. The head is made on less buying momentum. We get a divergent signal here, and then the second shoulder, you can see there we get another volume bearish divergent signal in terms of momentum, and then the market kind of drops away. When you drop down to the different time frames, you can see kind of a little bit more granularity what's going on. So this is the 1500 tip bar chart, so my medium time frame. Again, here's the 1170 level, which was the high. We get our momentum volume buying into this first shoulder. We get a professional up bar at that point. Professionals are starting to take profits. However, when we dip down here, this first point, we get some professional accumulation bars, so we're kind of just dropping down a little bit, and the professionals are saying, well, you know, this move isn't over yet, we're going to kind of keep this going until we can fully distribute our positions. So they kind of buy back in a little, and then we test again, new highs, professional up bar, blue up bar there, showing the professionals are selling again. When we come back and retest, and you can see less and less volume momentum going at this point, we get a high large range bar into new highs with a Rambo pattern. So this is, and it's an amateur bar, a yellow amateur bar. The Rambo pattern just showing me this is an amateur breakout that is likely to reverse. So Rambo is a reversal of amateur breakout, and that kind of marks the high quite nicely. We drop off, and then the final test, you can see here at this final test, the professionals just taking their opportunities to take their profits and get short, and then the down move can start. And you can see that this second peak happened with less kind of buying momentum happening at that point, but almost an exhaustion amount of kind of selling at that point. Professionals are getting short, and as soon as the lows of those bars are broken, you can see that the market kind of just dips away. And then just dropping down for a little bit more granularity to the lowest tick bar chart that I'm using for 500 tip bar chart, and here's the move here taking place over a course of almost an hour or so at 1170. We get an end of trend warning signal here. That's my first kind of indication that we're running out of steam. We have a second cyclical turn after an end of trend warning signal, which for me is usually a low risk entry point here for reversal trade. So that was a nice one, marked kind of the end of the this up trend. and you can see all these Rambo reversal signals up here. You know, the push into these new highs is being led by the amateurs, so you know it's kind of suspect with these yellow bars going up, and then the market drops away. Again, Rambo's kind of just pushing forward into a breakout move here, and then here are all the professionals stepping in at this second shoulder. Bang, 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 3 or 4 bars, blue bars there, showing the professionals are taking their opportunities to get short. We get an exhaustion amount of buying at that point, and then the market dips away. So there we go. That's just a kind of a volume interpretation, a head and shoulders pattern or a triple top type pattern. You can, by looking at the volume and the professional, the volume momentum and the professional amateur activity, you can get a little bit better understanding of what's actually taking place at that turning point. I didn't actually trade that move. That was kind of late in the day for me. What I was trading was this low. We had the ADP numbers came out before the open, and that's the market sold off pretty heavily at this point here. And for me, I was kind of trading this low at 1162. You can see for me some of the things were starting to come together. We had a professional down bar showing that there are professionals starting to accumulate at this point. When we drop down to the 1500 tip bar chart, you can see here we had exhaustion selling at this point with these professional down bars into an end of trend warning signal. So for me, that's kind of a really nice combination, a kind of trifecta combination, where I'm starting to see exhaustion volumes followed by bullish divergence, professionals active, reversing positions, taking profits and so on, and a cyclical turning point. And then when we drop down to the 500 tip bar chart, again a very nice kind of end of trend warning signal here that marked the low. We'd had our exhaustion selling at this point, all of these bullish divergence points happening here with professional buying happening at those lows, and these Rambo patterns, these little R's coming into these new lows, and these were suspect kind of selling taking place by the amateurs at those points, showing that that move was likely to reverse and go the other way. The trick to all of this is finding the right entry point, low risk entry point, so that you don't get in too early and have to wait, and that's why I'm using my better sine wave indicator to measure these kind of exhaustion points with end of trend warning signals and cyclical turns, the second cyclical turn after an end of trend warning signal. So there we go. That was the entry that I was playing off kind of earlier on in the day. Now I just want to recap on where we are in terms of the market. Mentioned a couple of days ago the Trin oscillator had turned down, and we're likely to see some weakness, a downswing in the market. We've got a bearish divergence signal on the Trin oscillator here. Put call ratio and smart money oscillators, both of these are overbought at positive 176, positive 167, but they've not actually turned down yet. And this is, I suppose, a bit typical coming into a long weekend, a vacation holiday weekend. We tend to get fairly bullish activity. However, when I look at my long-term chart, this is the chart I wanted to show. This is my highest time frame tip bar chart, my 40,500 tip bar chart. We're starting to lose momentum in terms of this up move. We had our end of trend warning signal here, and we've had a cyclical activity ever since for basically the last 2 weeks after this. And what I just want to turn your attention to is all of these bearish divergence points happening here, these white dots at these new highs. So we have our exhaustion buying at this point here, and then ever since then you can see with the better momentum indicator we've got less and less buying pressure, buying volume going on coming into these highs, and we've got all of these bearish signals with these white dots kind of going on. So there's just not enough volume to push through to new highs at these points. And for me, these signals, these bearish divergence signals that come very close to the zero line, this little dotted white line here, the zero line, those are the ones that tend to be the highest probability trades, because they're showing that the market is really in imbalance at this point. And we'll often see this where we get a bullish divergence point and a bearish divergence point very close together and very close to the zero line at this point here, is that the market has really reached equilibriums at this kind of high level. It's like we've almost run out of oxygen to push us any further higher, and we're just kind of floating on thin air at the moment. That's when we're likely to see kind of large reversal trend moves take place. Don't think that's going to happen prior to the Easter weekend. So on Thursday's trade, I'm not sure it's going to take place there. But do remember, on Friday we've got non-farm payrolls out, which is going to be an important number. The ADP numbers that came out overnight were a bit of a shock to the market. They turned out to be negative instead of positive, which is what the market was expecting. If the non-farm payrolls come out as really bad, I mean that would be a fundamental driver of a breakdown in this market and a break below the 1150 type level. So just want to point that out, that we're losing momentum here at these highs. Anyway, so there we go. Hope that was useful to you, and good luck with your trading.